Just want to say it's been fun. It's been fun being able to like get to know you guys and your stories and help with very direct, specific examples.
Thank you, man. It's been really, really helpful.
Thanks, buddy.
I
Yeah, so
appreciate your
far,
help, Scott.
honestly,
Yep.
brilliant so far. Like again, probably same experience as you. First time I had an answer like that. First time I'm having like straight communication with the trader. So thanks.
Yeah, I appreciate that. Trading can be a lonely thing. My fiance got tired of listening to me talk about day trading like probably 2 years ago. I literally talked to her about it for like an hour on our first date, which is embarrassing, or sorry, our third date, which is embarrassing, but like she doesn't care. She's really nice about it. She like smiles and she doesn't tell me to shut up, but she's not listening. So
I feel that 100%, man. Yeah, when you say trading is lonely, that's like it's like number one. I've thought about that for a very long time. Like you have all this like knowledge or all these experiences you want to like maybe just express to someone. Nobody understands what you're talking about.
yeah, 1,000,000%.
Yeah, isn't that gambling or isn't that
Yeah.
impossible? And and you're not that profitable either. So you do think like maybe it is impossible, and nobody knows.
A big
Yeah.
reason why I started the Discord was because like I am kind of a loner. Like I've always been really small group of friends. I just keep it really small. I work a lot. Like I just like to stay focused. But I tried to do all the day trading stuff myself. I didn't join any Discords. Anytime I did, the people just like didn't know anything and it just didn't help. I tried to learn everything on my own. And so just looking back, I was like, wow, if I had me to talk to me back then, like I could have saved myself so much time and effort and like stress and unhappiness. And so I was just like, wow, I was doing it wrong by being alone like that. But
One of the things that I learned along like my journey is that even if you watch somebody live, even if they give you like some signals, I didn't find it very useful because if I didn't know like the basics of technical analysis and if I didn't know how to use like Thinkorswim, at that point it was Schwab live. I
yeah,
forgot what it was.
yeah.
It, it was horrible, but I thought it was cool.
Smart, street smart
Street
edge.
Smart Edge,
Yeah, dude, I
yeah,
use
that
that
thing
too.
was trash. But
That's so funny.
yeah, but yeah, I couldn't do anything. I was like, these guys are making thousands of dollars. Like, I'm just gonna listen to him and I'm gonna make thousands of dollars. That was definitely not the case at all. I felt lost. I also felt like yeah, I just couldn't do anything because I didn't understand the fundamentals or how to use the application. So I didn't have a stop loss, bracket order, none of that stuff. So that's why it's kind of important to really try and at least learn the fundamentals.
1,000,000%. Like I did the same thing. I actually, that's why I make so many of these reels where I'm like, partially calling other people out is because like I literally made my channel, my YouTube, everything a couple of years ago because I was so fed up with all the content because I was in your shoes where I was like, I watch these guys live trade. They don't explain shit. They don't say their stop loss. They don't tell me how much they're entering or even like, hey, I'm buying a lot. I'm just buying a little. I'm scaling. Like they don't say shit. And then they just are like, oh, I made $1,000,000. And I was like, what the hell is this? So like I literally made my YouTube channel originally and my original videos just to be like, hey guys, this is how you actually trade. This is what's going on. This is how it works. And this stuff is kind of just like marketing that they're doing. So like some people might see some of my reels and think like, oh, he just like shit talks people, but like literally it's the reason why I started my whole entire channel was because of that. But anyway, I guess I should get started here because got some good stuff to cover. And I'm sure that this is probably about how many people are going to join. What time is it? Okay, yeah. So we'll just get started here. It's nice to see everybody joining here. I'll definitely open this up for a Q&A at the end so we can all talk and hang out. But at the moment, I thought, I'll just be really lame, like this is grade school or some elementary nonsense where I'm just gonna like introduce myself for like 30 seconds. Lame as it is, I thought it'd be good because I know nobody probably really knows me. I grew up in Colorado. I basically stayed there in Denver my whole life. It was just me and my mom. They got divorced, like my dad and her, really young. So we just moved into my grandma's house in Colorado. Never really had any money, never knew what I wanted to do in my life, sadly. I was always trying to figure it out. I had a really hard time in high school, just like being a bit of a loner. Then slowly I went to college. I slowly tried to like figure out what I wanted to do with my life. I got a job, started a career, but at the very same time that I started that job, I got into day trading because of my dad. My dad said for my birthday one year, he was like, "Hey, if I give you, $500, will you put $500 into your investment account and create this account on, I think it was Fidelity." And I was like, "Yeah, sure. Like, it's probably about time I get into investing." Started off kind of gambling where I was risking too much, didn't know what I was doing, ended up losing a lot of money after 2 months. And then I made a lot of it back, just too much risk. I'm pretty competitive. So I stuck it out. I wanted to get good at it. And after maybe about a couple of years of really just studying and trying, I just wasn't really seeing any results. I felt like I was getting further and further away from getting good at it. And looking back, it's just because I was studying too many different things. I was watching all the YouTube videos from all the different people, all the strategies, all the indicators. And so I finally just started reading books only. I stopped with the YouTube. And more importantly, I started laying around by myself just thinking, what does the perfect entry look like? How do I want to put my stop loss? When do I get out of the trade? What if it does this? What if it does that? And I literally thought about it for a very long time, like a couple months, until slowly I decided on everything. What my entry looks like every single time, what my stop loss looks like every single time, how much I risk every single time. And so I took all of the variables out of trading, made it so that everything was the same every single time. And then that way, it was up to me to practice my own skills as a trader to decide, when do I take a trade and when don't I trade? Is this setup feeling really confident? Am I really happy with this one? Or should I probably sit this one out and just wait? And that really helped me pay attention to my thoughts, what my brain was doing, emotions, do a lot of self-reflecting, and it really helped me practice my skills as a trader. So I stuck to trading the same few things, trading the exact same way every single time. And now you guys see how I trade in the live trading. This is just a result of sticking to those same concepts and principles every day for it's been about 3 years since I decided to really stick to those same principles. So since everyone's new here, I just wanted to go through some of those concepts. Um, I'm going to try to go through them a little quick because I know a lot of shit and I tend to talk a lot, but it's a lot of deep stuff. So I'm going to try to keep it like high level, a little simple. So hopefully I can write some things out here. I might need to pull up the whiteboard. I'll probably use the chart a bit too. Okay, so just for starters, I just wanted to go over the three things that I believe and that has been statistically proven from a lot of data and from a lot of books that I've read as well years ago. I want to talk about the three things that differentiate successful traders from traders who tend to lose money. So, number one, it's pretty simple. Beginner traders or people who are not trading successfully tend to have very large losses and small wins. And this is due to emotions typically. So, I'll just write it out real quick. So, basically, what happens is naturally, as human beings, when we're in a trade, let's say that we buy like right here. Okay, we buy all the way down here. It moves up a little bit in our direction and then it starts to drop again down here. The normal human condition for most people who get into trading is okay, I'm at a loss and this is dropping. And so what happens is in your brain tries to kind of justify things and make you feel better. There's this thing known in psychology where your brain is always trying to stay at equilibrium. That means that essentially your brain is always trying to defend itself and keep itself happy. So when something bad happens, like you're down a lot of money, the brain starts trying to come up with reasons why that's a good thing or why you should feel better. Oh, well, this means it's cheaper, so I should buy more. Oh, if I buy even more, and it goes up, then I'm going to look like a genius and I won't have to take this loss. So basically, there's a lot of mental pain when you're in a really big loss. And the brain starts trying to do everything that it can to tell you why you should continue holding this loss, hoping that you'll make it out of it. Kind of like a survival instinct. Like, if you're fighting for your life, you don't give up until you're dead. You don't just randomly say, oh no, it's fine. So the same thing happens in trading. Number two, they add to their losses, which, it works sometimes. Like here, it might have worked. You buy down here, and then when you sell up here, you get off and you might make a little bit of money. Maybe you make about one time as much as you risked, probably not even that, but maybe you get out there with a decent win. And then you've basically built that habit of thinking, oh, fighting the market, buying on losses, this is good. I would have had a loss, but instead I kept buying, I held it out, and now I made money. So that's the way I should trade. But the problem is when you continue trading like that, it only takes a couple of losses that don't reverse to cost you a lot of money. I literally just pulled this up. I haven't even looked at these charts. We just went back to yesterday, and here we are. You do the same thing here. You're like, okay, well, I'll just buy here with no stop loss. And then you buy again. And then, well, now it has to go back up. You buy again, you buy again. And suddenly the market closes, you're down probably like this would probably be the equivalent of maybe like 15 losses because here, this first trade, this is like -7 R. This next one would be like -5. This one would be like -3. So, like, you'd be down a lot of money. And then what do people do? They're like, well, I better hold this trade overnight. I don't want to lose two or $3,000. I'm just going to hold it overnight. And maybe the next day it goes up. But what happens if the next day it drops 2% before the market even opens? So suddenly you've risked way more money than you meant to, and you destroy an entire account. So we do the opposite in trading. This is why we set our stop losses before we even enter our trade and why we only look for large winners. This way, we're forcing ourselves to have small losses and big winners. And that way, it puts more responsibility on our shoulders to keep our standards high, to only take trades that are worth our time, and to force ourselves to try to hold out for more profit. That way, when we look back at our trades, we'll see that we have small losses and big winners, which is the total opposite of how most beginners do this. So, number three, the final thing is trading frequency. Over millions of trades, this is a quote from a book, but over millions of trades from tens of thousands of traders, it's been proven that most all of the traders who lose money take significantly more trades than traders who are successful. Successful traders, they are very picky, they have very high standards, they're very clear on what they're looking for, and they don't see that many trading opportunities. That's why you normally see me take one or two trades a day, and honestly, that's pushing it. Like that might be overdoing it a little bit, but I like to live trade with you guys. Sometimes I get ahead of myself, being in front of an audience, and sometimes I might take some trades that are only like a C plus or a B minus setup. So that's on me. Hopefully I can do better in the future, but let's go over, I'll just show you guys just the basics of how to basically draw out your trade plan. Let's move back to a trade that we took today on Avgo, and then I'll just go over some of the quick criteria of what creates my strategy. Just for example, we saw this pre-market low, which created this really nice, beautiful, very clean level of support. I mean, it's just so obvious. You just look at it, you see there's level of support there. Same with this high. So we were in this range basically. And what I wanted to do was when we got to the low, I was looking for a breakout. And I know that the old me years ago would be like, oh, you can't just take every breakout. Well, you're right. There is a small nuance to it that I cover in the program. If you're live trading with me, you see that I'm looking for confirmation of the market selling off and some other conditions. I also look at the daily chart. I'll go over that a little later. But anyway, so as we get this breakout, I used a small stop loss because there's a saying from a book called The Little Book of Market Wizards that I read a couple years ago that I really like and I strongly agree with based on my experience, which is that the best trades work immediately. So in this case, I decided that if this was going to reverse on me, I just don't want to be a part of it. I'll just take the loss, even if it reverses and goes back up and then turns into a big winning trade. That's fine. I'm just going to take the loss. So I used a fairly small stop loss, entered on the breakout. I actually used a smaller stop loss and we made about, it was like 2.5, 3R roughly, something like this. I'm just going to quickly go over how to manage risk and how to calculate this stuff. When you go to enter your trade right here, let's say it's at $223, and we decide we want our stop loss up here, which let's say is at 224. That means that we are risking $1 per share, right? There's a $1 difference per share. So that means we can then very easily calculate how much do we want to risk on this trade. And a very simple way of doing this is like if you're a beginner, you might just want to risk like $30, just keep it really light while you practice. But anyway, let's say we want to risk $100. Well, if it's $1 of risk per share, then I'll buy 100 shares. Excuse the bad handwriting, 100 shares. And so that equals $100 of risk. That means when our stop loss gets hit, I will lose $100. That also means that when it gets to 3R down here, I will make $300. And if it gets to 5R down here, I will make $500, assuming that I still have my full position size. So now I just wanted to cover how to draw this, and then I'll cover, what makes a good entry in my mind. So I use this Fibonacci extension tool. You just click down here at the bottom, and then it's this little percentage with the line. That's called the Fibonacci extension. And then I went to edit the properties, and it has this coefficient. So my stop loss I set to -1, break even is 0, and then everything else after that is a multiple of my risk. So you can see -1, which is my loss, my entry, +1, +2, +3 is multiples of my risk, and then +5. So that's what you're seeing getting drawn out here very quickly is whenever I use this extension tool, just helps me draw out and visualize my trade plan. If I get stopped out on a trade, I typically stop trading that stock, at least for, those next 20, 30 minutes, because I don't like to re-enter in trades. They can be a very slippery slope. You never want to start, fighting the market and then losing money over trading. It's just a habit that I stopped a long time ago. All right, so then the last thing is let's go over just some of the criteria that I look for in trades, and then I'll open this up to some questions and answers. And I know this is pretty dense, pretty quick. There's just a lot to trading, so I want to leave enough time for everyone, and I don't want to overload you guys. This one we actually didn't take. This was just an idea today during the live trading that I called out, and we could go over the last 7 trades that I took that have been winners so far, but let's just use a really recent one instead. So the first thing that I look for in a trade is a very obvious price level. If you're struggling to find the price level, then there isn't a price level. They should be very obvious. Like it should be very, very obvious that price is getting stuck at that level. Price levels act as magnets. So basically, it's very likely that price moves between these levels. So here, actually, let me zoom out. Here we can see that in the pre-market, price was stuck at this level. Previously, it was above that level, then it was below that level. And then we saw it after market open, we saw it get respected. Same with this one, we saw it and then sold off. So I like to use price levels. They're very reliable. Price tends to move between them very smoothly. So at those price levels, we want to then look for consolidation. Consolidation is when price basically consolidates. It clumps up together. It stops being so volatile. And the reason why I like that, so like right here, I mean, sorry, you can ignore this candle. Maybe it's a bad example. This candle is it didn't really happen like that, I don't think. But anyway, as price tends to hug this price level, we get consolidation, which lets us see where the support and resistance is. We can see the resistance right at $388, and we see the support at $385. So once we get the breakout, we start to get that confirmation that price is reversing to the upside, and we know exactly where to put our stop loss. We put it beneath previous support. So previous support was at $385. So that would be our stop loss. Our entry is on the breakout. And so that's how we get like these kinds of trade ideas. However, in this example, I wasn't trying to buy right on the breakout. I wanted to wait for a little bit more confirmation, such as a retest, which is what it did. So at that point on the second candle, all right, there we go. On the second candle here, that's when we would have looked to enter. And that means our stop loss could have been even smaller because of this previous candle. I go over it more in the program. Sorry for rushing things or if that seems a little vague, but that's how we got this trade idea. And that's why this was already left up on my chart. And then another thing to trading is the reason why I like these price levels is because essentially everything beneath this level is sellers stepping in and taking control. And once we break out above a price level, that is when we're looking for confirmation that buyers are here. They're waiting on the sidelines, they're ready to step in, and they're ready to take control. So, what happens here is when price starts to confirm to the upside, these sellers close their positions, which means they have to buy back their shares. That adds buying pressure to the upside. People like me who are waiting for that confirmation, we see the sellers losing, we buy in, and that adds even more buying pressure to the upside. And that's how we slowly build these trends. And then the third thing that I look for, which is there's quite a bit to it, so I don't know if I can really talk on it in full right now, but it's market conditions. So, market conditions, I like to make sure that I'm trading something that has a lot of volume or a lot of other traders. So that's why I stick to things like the NASDAQ, NVIDIA, Tesla. Maybe if like something else has news like Palantir or if Meta has news, I'll look at those. But basically, it's really important that we're always trading with other traders. Not everything in the market is being day traded. There are over 10,000 stocks in the stock market. There are plenty of currencies, commodities, asset classes. Not everything has day traders in there. And we need day traders to be there so that the market moves correctly. As you just saw, the market moved here correctly because there are other traders here who make the price move this way. There are people like me who see this and they think, oh, I'm going to buy. And then when I buy, I'm not going to sell until I get confirmation that this is reversing. So there's no sellers. All the sellers step out, all the buyers step in. And this is because other traders, investors, people who are looking at these charts are thinking the same thing. So they all switch sides, they all start buying, and then the sellers just wait on the sidelines until they get confirmation. But if nobody's in the market at all, if nobody's really trading, then you might get something like this penny stock, Fubo, where in the early part of the day, there were traders, and then suddenly volume starts to die off, and then we just plateau. And then it's just completely flat all day long. This is the last place that you want to be. You don't want to be the guy trading all by yourself in the sandbox, over trading for pennies, losing money. Trust me, it's you want to be trading with other traders. So stick to really well-known things like even MicroStrategy is being day traded a lot right now because of Bitcoin. So just make sure whatever you're trading that it has a lot of other traders there. And then I think that's about it that I'm going to get into on technical analysis. I don't want to rant at you guys too much. I have a tendency of like, got a lot to share, got a lot to talk about. So we'll just stop there. I think I covered everything that I want. But yeah, if you guys have any questions, just click the raise your hand button and I'll unmute you, or you can also just put it in the chat and I'm happy to answer questions.
Hey, Skylar.
What's up?
So one of my questions actually today I was following you on the live, and I was following you on trying to find a trade. At some point, you said there's no buyer signals here. How do you identify that? How do you see something like what do you identify as buyer signals? What is in your mindset and what do you see in the chart when you're talking about buyer signal, seller signal?
I think that was when the market was selling off a little bit. I can't remember exactly when that was. Maybe we were looking at the market or like Meta. I'll try to find a good example. Actually, this is a pretty good example. So when I'm looking for, something like a reversal back up against the trend, or even like a breakout, I talk about how I want to look for just little signs that there are buyers or like potentially that there are going to be buyers, which, as you know, it can take a little bit of experience to get better at that. Um, Day trading is very similar to poker. So in poker, when you're around the table with 10 other people, everyone's kind of trying to keep their cards close to their chest where they don't tell people what they're about to do, which not really what people are trying to do in trading. Nobody's really out there to get you. But obviously, in poker, you don't, nobody knows what your cards are until you lay down your cards and you play your hand. And the same thing goes in trading. The only thing that has been associated with day trading out of every single game, out of like anything intellectual, any previous knowledge or experience is poker. So what happens is everyone's sitting around the table as something sells off. Most of the other players are going to sit there and stay quiet and reserved. They might have their trade idea in their head, which is, oh, I'm looking to run this back up. I'm looking to buy. So we're all just sitting there and we're waiting for confirmation. Confirmation is a little bit subjective. Every trader has slightly different things that they like to look for. But yeah, let me get into it. So when we were selling off this morning, for example, here, when I'm saying that, okay, I'm looking for a reversal, I want to buy this and move back up. During this, I'm not seeing any buyers. We're moving down. We're not making any higher highs. Like every candle is making a new low, low highs. Like we're just clearly trending to the downside. I'm not seeing any buyers stepping in. And some people might think, well, like, oh, we're at this price level. Should I just buy? And it's like, well, no, I would rather miss a trade and wait for more confirmation because at this point in time, I'm just not seeing confirmation to the upside. Remember, we like to look for consolidation. I wish I could write this out quicker. But anyway, we like to look for consolidation. That way, if we got consolidation right here, we could then wait for the breakout to the upside. However, in this case, we started to consolidate, and then what happened? We broke out to the downside, which would be a confirmation that we should potentially continue going short on this trade. We're at this important price level, breaks out to the downside. We're continuing the trend to the downside. If you think that we have enough room to make it to at least 3R, then that trade might be worth taking. Anyway, so like to answer your question, when we start moving back up to the upside, this moved a little too quick for me. There's no consolidation. It just went right back up. So I wouldn't be looking to buy there. And I'm okay missing out on trades like that. I need the confirmation. I need to know where to put my stop loss, where to enter. I need to have a good reason, a good risk to reward. And this just didn't really meet that. So until we get that, I'm waiting for buyers to step in. And then last, I'll just show another example, maybe like Costco, which is a swing trade that we're currently still in. So in Costco, when we have this price level later in the day, because we always wait for price levels to form, we don't just jump into trades. We wait for price levels. We wait for the pattern to form. We got this breakout right here. And so obviously at that point in time, we don't know for sure if buyers are going to step in and agree with us, but we can look at the daily chart. So let's see where it'd be at on the daily chart. So actually, funny enough, when it was breaking out right there, that was it breaking out of this level on the daily chart, which has been a very apparent level that we've been watching all week long. And that's also when this candle turned green. So that's a little bit of confirmation that I like. The candle's turning green on the daily chart. We're getting this big breakout on the daily chart. Swing traders who have lots of money, other investors, are probably looking at the daily chart. That adds to the idea that, hey, maybe we'll move up from here. And then during the 5 minute breakout, we just wait for a little bit of confirmation. We see the buyer stepped in, price continued holding. So overall, there was a lot of confirmation that this breakout was working and that other buyers were stepping in. Sellers didn't take over. They're waiting on the sidelines. They were thinking, no, I don't want to short this. Buyers kept taking over. So there's no way to know for sure. These are just some of the things I like to pick up on. Let me look at this chat question here and answer that. How do you find stocks? Yeah, good question. I spent a lot of time making custom scanners with a million criteria and custom scripts. Honestly, over the last 5 years, I have just tried to narrow it down and stick to the same things each day. So the NASDAQ, NVIDIA. Recently, I added MicroStrategy because Bitcoin's been moving a lot and Palantir's been taking off a lot for the last couple of weeks. So that's been getting day traded a lot. Um, you can find these stocks just by, you could join like a newsletter that might point out this stuff or that might talk about some of the news. I don't recommend getting stuck reading news all the time or like trying to guess the future based on news. That's a slippery slope. Everybody disagrees with each other in the news. But, just be aware, oh, this is going up a lot. Maybe I'll look at the chart. Oh, this Apple got downgraded today. Maybe I'll look at the chart, things like that. Otherwise, I like to stick to things that have the most volume and that are just traded the most in general. You can even Google it and you'll see the NASDAQ and NVIDIA will pop up as some of the most day traded things. If you do futures or commodities or even Forex, Forex only has like a couple or like three currencies that have more volume than the rest. Talking about USD versus Japan, USD versus the Great British Pound. Oh, or if you do commodities like platinum, gold, oil, those are pretty good. Just use a bigger time frame, like the 1 hour time frame. Yeah, sure. I can share this recording. Yeah, I'll get the recording and then I'll post it in the Discord afterwards. The 15-day, um, is this on 15-day? This is on like maybe like 6 months. I mean, mine is set to 3 years on the daily chart, but doesn't really matter. Yeah, I always use the 5 minute chart and then I use the daily chart because I like to see what's going on a bigger, just from a bigger picture. I like to see everything. It helps me stay zoomed out instead of getting stuck in the weeds of like every little minute movement of a candle. You want to see the overall picture. You want to be reminded that, hey, we're stuck in this range. We're consolidating. There's no reason to take a swing trade here. So why am I taking 10 different day trades in this tiny little consolidation here? Just a good reminder. Yeah, I get that. When I bought a course like 3 years ago and when I was like studying YouTube all the time, people always talked about confirmation. And I was like, people talk about it, but then nobody ever explains what the hell it is. So let me try my best to explain just like a couple of things that are confirmation to me that I like. And remember, confirmation and taking high quality trades or like high win rate trades is not from any one or two pieces of confirmation. You want a lot of little tiny pieces of confirmation, which I'll go over. And I bring that up because I like to remind everyone how partially random the market can be at times. Our strategy does not fit every little movement of the market. It's not possible for us to predict every movement. So instead, what I like to think is that in general, let's say when you go to take a trade, that it has a 40% probability of working out. Now, every little bit of confirmation you get, I like to think that adds about 5% to your accuracy. So, it starts to break out. That has a 45% chance. It comes back down and retests a little bit and then goes back up. Now you have a 50% chance. The market starts moving in your direction as well as, your stock. That's another 5%. The daily time frame looks good. That's another 5%, and so on and so forth. So let me go over some of those. Let's see. Maybe I'll pull up a different stock here just for fun. What else did we look at? I think Meta. Meta is a decent one. So we'll just use this as a very interesting example. Okay, so confirmation for this potential reversal back to the upside. So that's a trade up here. I'll write this out just because I know that helps me learn, like if I were you guys. So let's do this. Okay, so one breakout of an important price level. That is just one little piece of confirmation that we're potentially going to revert back to the upside, that we're, going to break out and move to the upside. Because before, if it didn't break out, if we were just still sitting down here, then we don't have confirmation. It hasn't even broken out yet. So how can we know that it's just going to move back up here. We don't. So the breakout just adds that little bit where it's like, okay, that adds 5% to me feeling better that this trade plan is going to work. That takes us to a 45% win rate. Number two, this one I don't always wait for and I don't always use, but we'll just use it as an example. That's when you get a retest. So let's say that it starts to break out, kind of like Costco did, and then it kind of lingers. It sits there. We use a different word. Sorry, that's too zoomed in. All right, so we get the breakout, and let's just say that price just kind of sits there a little bit, right? It's undecided. We don't know if sellers are going to step in or buyers. We're just not sure. But it prints a candle. Some sellers step in a little bit, but they're not able to move it lower. And then we have a third candle that starts to move up higher and continue the trend. That would be another slight amount of confirmation where we're like, okay, good. There weren't that many sellers who stepped in. Buyers are stepping in. We're continuing to move to the upside. I might want to add to this position. I'm now seeing more confirmation that the sellers are not that interested and that buyers are potentially interested. So I like this. We might add maybe another 30% to our position. So for example, if you're risking $100, you might risk another $30. Another form of confirmation is the market. When we're trading things like commodities or currencies or other stocks, I like to keep tabs on what the market's doing. So when we took a trade earlier today on Avgo, right here, let me delete that. When we took this trade going short on Avgo, right beneath 224, I wanted to make sure that the market also wanted to move to the downside. We did the same thing twice this week on NVIDIA. I took those trades on NVIDIA because it looked like the market was going to sell off. So if we check, looks like this is like the seventh candle of the day. If we check the market at the same time here, it was breaking out to the downside more and it was continuing the trend. So overall, the market was agreeing with us. That adds another 5% to my accuracy of this trade being a good idea. And then a fourth thing that I like to look for is the daily time frame. And so, by the way, as you can see, just getting the practice, getting all these things that we like to look for adding up is really how you start to just kind of get better at feeling out whether a trade is good or bad. And that's when you really want to listen to your intuition and your emotions. If you're feeling very nervous, you don't know what's going on, you just think, well, I think the price is going to go up, but you're feeling nervous, like, I would recommend doing what I did, where you sit out and you start thinking, what makes a good trade? Get really clear on it, or like watch my videos, whatever you want to do. But I highly recommend listening to yourself emotionally because some of my best trades work when I'm feeling good, I'm feeling calm, I'm feeling confident. And the reason why I feel confident and why those trades work is because I'm confident because of all the confirmation and all the things that are going my way at that point in time when I enter the trade. And then the trade works really well because of all those confirmations and other traders pick up on these confirmations. They have the same kind of trade idea. So they take the same trade that I do. And so we get sellers who step in and move it lower. So always listen to your emotion. The fourth one that I really, really like is the daily time frame. And this is the last one I'll cover. Don't want to rant too much, but I like to check the daily time frame. So when we started breaking out from here, right here at this beautiful price level, that's when we were breaking out from this price level on the daily time frame. And what a coincidence. It perfectly acted like a magnet and it moved down to the next lower obvious price level, which was down here. So that gave us a really good room to run to the downside, which actually, I guess, since I didn't write it out, I'll just write this out real quick. Number five, I like a good risk to reward. I like room to run. The more room we have to run, the more traders will be interested in that trade and will potentially agree with my trade idea, take the same exact trade and push price in my direction. So we had a lot of room to run here. Sellers stepped in. That's our confirmation. Another one you could even say is the trend. So all in all, we just looked at this trade idea right here of going short. Well, we're trading with the trend, check. We're getting a breakout from this level, check. Like that's more confirmation. Sellers are taking over. Sweet. We have a lot of room to run. It looks good on the daily time frame. The market's selling off. So like if this were another stock, the market itself is also selling off. So all these things come together, and that's when we have those trade ideas. Trade ideas happen within like a 30-second span. I like to get ready for them, wait for the confirmation that my idea is coming to fruition, that it's happening. And then as it starts to happen and it plays out the way I thought it would in my head, I start to add to the position. Those gray dashed levels, fib levels. No, actually, I don't use Fibonacci extension or any of those to like decide on my trades. These are just price levels that I've drawn out previously. I should probably clean up some of these. But yeah, what I do is like I'll just click here on the daily chart and I'll just add the price level that I see. All right, sweet. Well, yeah, I think we've gotten some good stuff in here today. So I primarily just trade shares. I don't usually trade options. Sometimes I'll day trade options on the NASDAQ. I'm actually about to make a video for MKG here, one of the team members. I'm going to make an options video later this month so that you can see how to do that. Um, Otherwise, yeah, I mostly trade shares. I will buy or short during day trading. We do a lot of both. I'd say it's about 50-50. A lot of the time I'm buying, a lot of the time I'm shorting. When it comes to swing trading, I mostly only go long. The reason why is because for the last 2 years, just based on fundamentals and just me knowing the economy pretty well and some other things, the market has been in one giant uptrend. It is historically bullish. It's had a lot of reasons to be bullish for the last 2 years. And if we look at a bigger time frame, like the 3 year, you can see we're just consistently moving to the upside. So typically, when it comes to swing trading, I'm mostly buying. Sometimes I'll find some things to go short on. We shorted Tesla not too long ago, but yeah, I mostly buy uh, unless we get a bear market. I was shorting in 2022 and early 2023 at times, but we've been in a bull market for quite a while. So they're not fib levels, they're just price levels. So like the drawing tool here literally says price level. That's just what it's called. So when I see something like, okay, I see all this support back here, I'll just draw out that price level. So the reason why is because the market likes to use these price levels as reference points of whether they should buy or sell. When you're above one of these price levels, you're typically going for a buy and running it up to the next important price level. They act as magnets, which we went over a little bit ago, maybe like 20 minutes ago. But yeah, they're just like, as you saw me draw these out, I drew them out because they just stood out to me. Just draw out the most obvious levels. Don't start drawing a million levels. Just literally draw out the ones that are just the most obvious. And by the way, these price levels, they existed before we got the breakout. This isn't in hindsight. We do this every day. So like here, there's this price level. And then look, lo and behold, we get the breakout right here. That's confirmation to the upside. And then it moves up to the next important price level, which is just like this general area. We create that resistance, we get a breakout, moves to the next one, so on and so forth. They're good reference points and they're good places to enter your trade. So typically with price levels, I do wait for it to form. Like for example, I wouldn't just be, let me think here, but like, let's say here, I'm not just going to take a trade on a breakout here. I'm going to wait for us to see that this actually formed in respect to this price level. So like when it gets here this first time, I'm not looking to trade. I just wait. And then by the time it moves down here, I can then look back and say, okay, other investors and traders respected that level. Now I'm aware of it. And then I draw it out. And then when it breaks out, that's the confirmation. I only enter my trades at price levels that have previously been respected. I don't just, you know, I typically don't just jump in hoping that it'll work out. I always trade a daily breakout. No, some of them are intraday trading where it might not be a really important level on the daily time frame. Just kind of depends, but those playbooks that I made that show like the red to green moves or the green to red, those are some of my favorite. I prefer when they happen about 15 minutes or 30 minutes after market open. But yeah, those are some good ones, but they're not the only strategy that I kind of use. All my strategies are very, very similar. I would say it's almost like a trading style. And then I just have a couple of different little confirmations and things that I like to look for, but it's simplified pretty well in the course, I like to think, and in the live trading. So let me make sure I answered everything to that question. Yeah, I mean, if you're getting confirmation on the 5 minute time frame, there are trades on the 5 minute time frame that might not look that important on the daily that you could still take or that might be worth it. But typically, I like the ones that function on the daily time frame too, just because it adds that little bit of extra confirmation, you know? Because when you look at the daily time frame, you're getting a lot of bigger players. You're no longer just getting the eyes of the people on the 5 minute time frame who are day trading, who are kind of like stuck in the weeds. You're also getting the big hedge funds and the big investors who might be looking at the daily time frame. So they're jumping in as well. Yeah, I mean, I did a ton of studying, but I actually tell people that 95% of the stuff that I studied, I don't use today. I spend so much time studying every single thing. So I did study economics for quite a while. I watched all the news, I read all the forums, the podcasts, the books, all the YouTube videos, all the indicators. My very favorite things that I would say that helped me out the most was I tell this to everyone. The first thing that I like the most for learning is ignoring 90% of those things because all it does is overcomplicate, it crowds your brain. So I tell people, I love fundamentals. I think they're fun. I love knowing about the economy. It's fun, but overall, I don't really suggest people get super absorbed or spend a lot of time on fundamentals or reading the news because that just creates emotional tilt and just messes with your trade ideas. And I don't really recommend watching random YouTube videos from random people. Like you don't want to watch from one guy and then a different guy and then a different guy because then you're just mixing a lot of stuff. So I don't recommend that. There are some books that I really like. I think it's called The Mental Game of Trading by Jared Tendler. I like The Little Book of Market Wizards, and Trading in the Zone is pretty good, although it's very simple. It basically just tells you there aren't as many trades or good trades as you think there are. The market, you're not supposed to know every little movement of the market. And then another one is Best Loser Wins is a really good one by Tom Hugard. He's a smart guy. He agrees with a lot of the concepts I covered today. Those ones helped. I like those. And then the biggest thing of all was taking the time to, well, actually, one of them was the live trading because I bought a guy's course a long time ago. Watching him live trade actually really helped me. I just, you can pick up on how they think and how they feel and how they carry themselves when they trade. That changed the way that I traded. It changed on an emotional level, on a subconscious level. I saw what it looked like to be good at trading, and I knew that I just wasn't doing it right. So seeing that really helped me understand how I should be and how I should conduct myself and how to treat myself mentally. When I have a loss, when I do this, when I do that, massively helped. Um, the guy's course didn't help me very much. I like to think mine's pretty good. And then other than that, yeah, just sitting by yourself, doing a lot of introspection and getting clear on things. You want to consolidate your knowledge as much as possible and simplify it as much as possible, which took me a very long time. And that's why I tried to present it as well as I could in this program, which I made it pretty simple. It's pretty smooth. I like to think I did a good job. So anyway, oh, sorry for neglecting some of these hand raises. Let me unmute you, Andreas. I know we've been talking a little bit in Discord. It's been fun.
Yeah. Hi, Scarlett. No, actually, you already answered my question on the chat. Thank you, man.
Hell yeah. Yeah, nice to
Sorry,
hear your
I forgot
voice.
to lower my hand.
Yeah, no, you're good.
Forgot to
Yeah.
lower my. Thank you.
And I'll unmute you as well, just in case you still have a question. And then otherwise, yeah, we'll probably just hop off here soon. I mostly just wanted to say hi to everyone. Wanted to get that live time with you guys, answer some questions. Originally, I was starting this off just to catch up with some people and say what's up. and we decided we're just going to open up to everybody. Thought it'd just be fun. Trading's not very social, so it's been really cool seeing you guys in the Discord. It's been really fun just answering you guys' questions. So yeah, and thanks for joining. I know it's the middle of the day on a Friday. It's like an afternoon here, so I respect you guys putting in the effort on a Friday. It's really cool. And yeah, I hope you guys have a good weekend. Just let me know if you have any other questions. Just post them in the Discord. Talk to me anytime. And then hopefully I can post some more fun reels on Instagram this weekend. Yeah, for sure. Yeah, my pleasure. Lots of fun. All right. Well, yeah, then I guess we're good. And just let me know if you guys have questions in the Discord.
Thank you. Time to sleep
Thank
here.
you. Nice meeting
Peace.
everyone.
Cheers.
Bye, everyone.
Yeah.
Bye, guys.